Welcome to my more important analysis videos on Thursday, 19th of July with me, Rich Perry, market analyst at Hantec Markets. Got a stronger dollar, which has resumed this morning. It looked yesterday as though that there was a slight sort of pause in that dollar strength. There's a little bit of a rebound on euro, a little bit of a rebound on sterling. Also, Japanese yen looked as though it was just sort of clawing back at some of the losses. But I mean, this morning we've seen that move regaining ground, and look at this, sterling now 80 pips lower on the day. Now that is certainly a function of the fact that we've just had out retail sales for the UK missing expectations. Yeah, not great. Missing expectations on the month. Disappointing month for June, and on also the year-on-year basis as well. So that's wages, CPI, and retail sales all missing this week. Not great, not great. So so we've seen subsequently sterling falling away, but generally speaking, we have got a stronger dollar, and interesting that the Aussie actually was outperforming earlier on the back of better than expected employment data, but is now not looking great. The Kiwi seems to be a big underperformer. Now that sort of ties in with my chart of the day, which I'm going to talk about on Euro Kiwi as well. So look out for that in a bit. But generally speaking, stronger dollar means also weaker gold. So we've got gold below 12.20, falling ever closer towards that 12.04 level. I'll talk about that in the charts as well. Equity markets mixed on equity markets. That weakness on sterling has helped to see a FTSE outperformance in the last 2 minutes actually. FTSE had been mildly lower, now mildly higher. DAX underperforming as well as the CAC. Seen the S&P 500 just sort of stalling a little bit, and the futures on S&P 500 about 0.2% higher. Not connecting. There we go. But equities on Wall Street still pretty strong, despite the fact that we've got a little bit of a slip on the open, potentially on futures. So this dollar index continues to climb higher. It's sort of regained some of the strength, hasn't it? Having broken that uptrend, it sort of tested that uptrend on a few occasions, just falling back earlier this week or late last week, but regaining some of the strength again. Can it break through the resistance? It's sort of fluctuating around a bit, but certainly the move has sort of regained some of the strength as treasury yields have started to tick higher on the longer end again. We've already had that shorter end pulling higher, which helped to shallow again, or shallow the yield curve, but just ticking a little bit higher once more this morning on that 10-year yield has helped to drive that bit more of a dollar gain. So in terms of data points, as I said, we've just had out the UK retail sales. This afternoon we're looking out for Philly Fed business ticking higher actually to 21.5, and also jobless claims are again around the 220 area. It seems to be sort of pretty much the norm on those jobless claims. So my chart of the day is Euro Kiwi, as I said. Now Euro Kiwi broke down yesterday. 3 bear candles in a row actually, but two strong bear candles in a row. That breaking the support at 71.40 yesterday on a closing basis, but it sort of continues what looks to be a corrective slip. But we have had a weaker Kiwi today, which is interesting. But generally speaking, look at these momentum indicators. Really are sort of pulling the market lower. Certainly on the MACD lines crossing lower, stochastics. But we've had a bit of a jump today. But is that jump now going to be a selling opportunity? We've got this sort of move to sort of looking as though it's more of a corrective force through this chart. Hourly RSI sort of going below 30. Now, if it starts to fail again around the 65 area, that'll be interesting, because you've got the momentum on the MACD lines as well, pretty negative. So is this just a rally that's going to get sold into? I've got this sort of pivot around 72.30, 72, where was that low? 72.37. So yeah, 72.30 to 72.40 area is a bit of a pivot range near term. Again, if it sort of fails to break above that, then you could see the the sort of momentum in this rally sort of rolling over again, and it'll be interesting to see whether the market can move back above that level. That 72.30 level is yesterday's high as well, so it's a little sort of important level near term. But certainly the momentum indicators is what I wanted to focus on here with this chart, and they do look corrective. So it'll be interesting to see if the chart sort of again sort of tails off and starts to move lower. Once again, we are trading within this sort of range, and I think this little sort of pattern that we've got going on here just suggests that we are sort of corrective once more within the range. So I wish you good luck in your trading today, and I will speak to you later.